Welcome back. The next corporate on our radar is Credit Access Grameen. Now, the company has an aspiration to become the preferred financial partner for 10 million low-income households lacking access to credit by 2025. The company is also piloting various new innovative products like payment products, savings and investment products via partnerships, insurance, etc., designed on meeting the evolving needs of its core target customer base. Uday Kumar Hebar, the Managing Director and the CEO at Credit Access Grameen, is now with us on the show. Sir, morning. Rima here. Can you talk about these pilot projects of yours, particularly insurance? What is the game plan? What is it that you're trying to achieve, your aspiration?
Good morning. Pleasure to be here. Yeah, as you know, in India, insurance penetration is quite low and more low than the rural. Therefore, our promoter, Credit Access India, and we headquartered in Amsterdam, have a plan to have a process in the process of commencing life insurance business in India, focusing low-income households, micro insurance, but in life insurance segment. So the business is separately a separate subsidiary of the promoter, which will be housed separately, and it's called Credit Access Life Insurance Limited. So they are aiming to do this, complete the entire license and approval process the next 6 months' time, 1 to 2 quarters' time.
This will be separate from Credit Access Grameen. This is going to be a project of the promoters.
Absolutely.
So the distribution channels, etc., what about the synergies that you can get?
Absolutely, because Credit Access Grameen itself is being treated as FII by having more than 75% foreign shareholding. We cannot be the domestic partner for the insurance company. So it's a promoter invested insurance company, and Grameen will be captive subsidiary, captive business partner for this business along with other insurance companies, and we will definitely innovate more and more. Low-income household specific products actually, which will be more suitable for the low-income households, for our customer segment. It will be helpful for us to get a synergy in terms of developing the right products in this segment, and then whether it is for insurance or a savings or investment, we can actually develop that.
Right.
And the synergy will be very good in terms of the captive business and captive support.
Okay. Now, this is, as you said, not part of the listed entity. This is separate run.
Absolutely.
Synergy is one thing, Mr. Hebar. What about diversion? There's limited bandwidth, right, to run one business.
There won't be diversion because it will be a separate company, separate management, separate premises, separate process, separate technology, everything.
But same promoters.
Different company.
But same promoters, right? Same promoters, right? That's why I'm asking. Is
promoters, of course. But promoters' involvement in both the companies. Both companies will run independently. Of course, promoters will give you strategic directions, being board members like the Grameen. They have been giving the strategic support, and then continuous support of anchor investor both sides. So that will be the major role of promoters, so, not into management, because management is definitely driven independently by two different companies. Therefore, we don't see any diversion either in insurance company or in Grameen because of this initiative. Nor promoter, because promoter is independently sitting in Amsterdam, and they will continue to support and guide strategically for both companies.
Is this why the news of the promoter selling stake in the company up to 5%, germinated?
Not really, because the promoter has sufficient capital, and they already set aside the required capital for this purpose. Therefore, there is no need of additional funding requirement at the promoter holding for this purpose. In fact, they're able to raise capital if needed. For example, just on 5th, they disclosed that they raised 2% from one of the Italian bank. It's called Banca Sanpaolo. Already invested in this company. They have sufficient ability to raise capital if needed. But as of now, there is no need, because they already sufficiently set aside this capital requirement for this company.
So there is no need of... Mr. Hebar, you are confirming that the promoters don't intend to sell any stake in Credit Access Grameen, and all the reports of them selling up to 5% stake, etc., are all bunkum?
No. I am clarifying that they don't need to sell stake for the insurance company purpose, whereas promoter company has been invested by more than 250 shareholders, patiently investing as and when there's a requirement of money for Grameen over last 15 years. So therefore, promoters want to give some liquidity to them, but in the meantime, promoter also realizing the fact that we need to improve the liquidity and floating stock in Grameen also, because it's a tightly held and very high promoter stake. So to match these two, promoters might sell about 5% per annum for at least in the midterm total, not more than 10 to 12%, to give a liquidity to the old shareholders who have been invested and patiently with us, with promoter for more than 15 years. But this is very minute, which probably works complementary to support the liquidity and floating in Grameen stock book, as well as to support the patient investors who have been there for last 15 years.
No, Mr. Hebar, 10 to 12% is, you're saying, the maximum they will sell, and 5% every year. But you said to old investors. So this will be, this won't be in the open market. This
will be normally, this will be on the block deal kind of
thing. The idea is to increase the free float, the number of shares available in the market, right?
Absolutely.
Because you need to stay at 25%, at least 25% as well, yes.
It is always ideal to have a good free float and good floating stock for any company. So which we need to do at a point of time. So therefore, promoters are thinking on that. But it will be mostly on a block deal kind of thing at a reasonable, and the price reflecting the company's valuation with the right market, correct? Right market, market fundamentals.
Mr. Hebar, we don't understand that, because if it's done by a block deal, it is likely to go to an institution, and again,
multiple institutions. It's
so
not that one
why would you not
multiple...
why would you not then dilute the stake via a QIP? In that form, the money comes to the company as well, and the free float increases while the promoter's absolute holding remains the same.
QIP, when you do QIP, it will not reduce the overall float. Even right now, we don't need funds. We are already sitting with 30% capital adequacy, right? 20. So we might take another 3, 4, 5 quarters for us to add more capital. Not necessarily now. It is actually but till that period, we cannot increase the float in any case. If we wait for that kind of time, therefore our intention is to promoter intention to reduce not more than 5% in any financial year, but not more than 10 to 12% overall in the medium term. But yeah, it will take step by step, not immediately.
Mr. Hebar, we're out of time, but thank you very much for talking about the promoters' insurance plans and the possibility that they will sell up to 12% stake in the next 2 to 3 years. Their current holding is about 73.5%, the promoter holding in Credit Access Grameen, and I guess that could come down at most to about 60%. That's the stock currently down 1.5%. But as a part of our series 2023, my colleague Prashant also caught up with S.